Hello everyone and welcome back to Explain the Charts. Today is October 22nd, 2025, and we are doing an in-depth analysis of the US dollar versus the Swiss franc, or USDCHF. There is a lot of conflicting information out there right now, so our goal is to cut through the noise and see what the charts are telling us. Looking at the news, we see a mix of headlines. FX Street reports that USDCHF is falling due to a struggling US dollar, even with a dim Swiss growth outlook. However, finance feeds and Investing Live are highlighting a significant bounce from a key support level around 0.7870. Finance feeds is quite bullish, pointing to a potential rise towards the 0.8000 resistance level. They base this on a strong bullish sentiment for the US dollar and a specific Japanese candlestick reversal pattern. This creates a fascinating conflict. Is the US dollar weak or is it strong? The answer likely depends on the time frame you're looking at, which is exactly what we'll investigate. The one level that multiple sources agree on is the importance of the 0.7870 support zone. It's been described as a level that has consistently reversed prices since June, making it a critical area for both bulls and bears. Let's switch to our daily chart to get the big picture. As you can see, USDCHF has been in a significant downtrend for most of 2025, falling from highs above 0.91 back in January. This multi-month sell-off has been persistent, with several failed attempts at a reversal. The price has been making a series of lower highs and lower lows, which is the classic definition of a downtrend. This long-term pressure is the primary reason for the bearish sentiment we've seen in some news reports. However, something very interesting happened just a few days ago, and it aligns perfectly with the news. If we narrow our focus on the price action from this month, we can see the story unfold. Look right here at the candle from October 17th. The low of this day was exactly 0.7870, the critical support level mentioned in the news. What's more, this daily candle formed a perfect hammer pattern. A hammer is a bullish reversal signal that occurs at the bottom of a downtrend. It's characterized by a long lower wick and a small body at the top of the range, showing that sellers pushed the price down, but buyers stepped in with immense force to close the day near the highs. This is a powerful technical signal suggesting that the downtrend may be exhausted. Since that hammer formed, we've seen 3 consecutive days of upward movement, confirming the initial bounce. This technical pattern is the core of the bullish argument and directly supports the analysis from finance feeds. The immediate challenge for the bulls now is the psychological resistance level at 0.8000. You can see that this area acted as resistance multiple times earlier in October, specifically between the 8th and the 15th. A decisive break above this level is necessary to confirm that this is more than just a temporary bounce. Now, let's zoom into the 1-hour chart to analyze the structure of this recent rally. Here we can see the sharp V-shaped recovery from the 0.7870 low on October 17th. Since then, the price action has formed a clear series of higher highs and higher lows, which is the definition of a new short-term uptrend. This structure provides a bullish framework for short-term traders. The recent consolidation just below 0.7970 suggests the market is taking a brief pause before a potential attempt at the 0.8000 resistance. The upward momentum appears healthy, but we are approaching that significant overhead supply zone. Any break in this hourly uptrend structure, such as a lower low below yesterday's support, could be an early warning sign that the rally is losing steam. Finally, let's look at the 15-minute chart for the most immediate price action. Over the last 24 hours, we've seen a strong push-up yesterday, followed by a period of consolidation. Yesterday's high was around 0.7968, which will act as the first minor resistance level to overcome. The price is currently trading around 0.7966, right at that key spot. Minor support on this time frame can be seen around the 0.7955 and 0.7945 levels. For day traders, a break above the 0.7970 area could signal a continuation towards 0.8000. Conversely, a fall below 0.7950 could indicate that a deeper pullback is starting. The volume has been consistent, suggesting genuine participation in this upward move. So, let's recap the critical information and potential scenarios. We are at a major inflection point for USDCHF. The key support level to watch is the October 17th low of 0.7870. As long as we are above this, the bulls have a strong case based on the daily hammer formation. The primary resistance and first major target for bulls is the 0.8000 psychological level. A secondary resistance lies at the October highs around 0.8070. Let's outline the two most likely paths from here. The bullish scenario, which I would place at about a 60% probability, is that the price continues its momentum from the hammer candle. We would expect it to break through the minor resistance at 0.7970 and make a decisive move to test and likely break the 0.8000 level. This would be reinforced if we continue to see general US dollar strength across the market. A confirmed break and hold above 0.8000 would strongly suggest a short to medium-term trend reversal is in play. The bearish scenario, with about a 40% probability, is that this is simply a corrective bounce within a larger downtrend. In this case, the price will fail to break 0.8000, showing a strong rejection at that level. This failure would likely lead to a break of the short-term hourly uptrend, with price falling back below 0.7910. Such a move would put the crucial 0.7870 support back in focus. A break below 0.7870 would invalidate the reversal pattern and could trigger a rapid sell-off to new lows. So, the key thing to watch in the coming sessions is the price action around the 0.8000 resistance. A strong rejection or a decisive breakout will likely determine the direction for the coming weeks. Thank you for watching this analysis on Explain the Charts. Please remember, this is for informational purposes only and is not financial advice. Always conduct your own thorough research and risk assessment before making any investment decisions. Don't forget to like and subscribe for more in-depth chart breakdowns.